All right, so today we're going to unlock some serious stock picking secrets, right? If you're listening to this, you're looking to really up your investment game.
Yeah.
And we are diving deep into a book called How to Make Money in Stocks to help you do just that.
Great book.
Yeah, and we're not going to spend time on the basics,
No, yeah.
We're assuming you've got those down already.
For sure.
What we're after are the real gems, those strategies that make this book stand out. So
Absolutely, yeah.
what really jumped out at you from this book?
Well, one of the most fascinating things about it is its focus on a system called CAN-SLIM.
Okay.
It's not just about picking random stocks, it's like a framework for
Right.
identifying companies with real growth potential.
Okay, so it's like a checklist, right?
Yes.
For finding those hidden winners?
Yeah.
But, there are tons of checklists out there. What makes this one special?
Well, CAN-SLIM is built on decades of analyzing the most successful stocks in history. It boils down to 7 key factors, each represented by a letter.
Okay, let's unpack those factors.
All right.
Starting with C, which is current quarterly earnings and sales, if I remember correctly.
You got it.
I'm guessing this goes beyond just looking at whether a company is profitable?
Yeah, you're not just looking for profits. You're looking for accelerating earnings growth.
Okay.
Think of it like this.
Okay.
You want to invest in a company that's not just moving, but gaining speed.
Got it.
The A in CAN-SLIM takes this a step further, looking at annual earnings increases.
So consistency over time.
Yeah.
A few good quarters might be a fluke.
Right.
But strong annual earnings over several years, that suggests that the company is building something sustainable,
Yeah,
right?
exactly. Yeah.
That's actually a really good point.
Yeah.
I've definitely been guilty of getting excited by short-term spikes in the past.
It's a common mistake.
Yeah.
But CAN-SLIM emphasizes the importance of looking at the bigger picture, identifying companies that are built for the long haul. And that brings us to N, which I think is one of the most intriguing elements. Newer companies, new products, new management, new highs.
Ooh, I'm really intrigued by this one.
Yeah.
It seems to be all about finding those companies that are shaking things up, the innovators, the disruptors.
Exactly. Think about companies introducing game-changing products,
Right.
undergoing positive management shakeups, or reaching new price highs. These are often signs of a company on the move, one that's not afraid to challenge the status quo.
Okay, I can already see how the system pushes you to think differently about investing.
Right.
It's not just about following the herd, it's about identifying those future leaders before they become household names.
Absolutely.
What's next on our CAN-SLIM checklist?
Which stands for supply and demand.
Supply and demand.
Now, this might seem obvious.
Right.
Supply and demand drives everything in the market.
Sure.
But this principle in CAN-SLIM emphasizes looking at trading volume as a key indicator.
So it's not just about the price of a stock, it's about how many shares are actually changing hands.
Right.
High volume. That could indicate strong institutional buying, right?
Precisely, yeah.
When you see those big institutions pouring money into a stock,
Yeah.
that's a signal that they believe in its potential, right?
Yeah, they have teams of analysts doing deep research.
Right.
So their actions carry a lot of weight.
That makes sense. It's like getting a glimpse into what the smart money is doing.
Exactly.
Okay, so we've covered C, A, N, and S.
Right.
We're halfway through CAN-SLIM.
We're getting there.
What does L stand for?
L stands for leader or laggard.
Okay.
And this principle reminds us that not all stocks are created equal.
Right.
Some companies are simply better at what they do, driving innovation and outperforming their competitors.
So it's about choosing those companies that are at the forefront of their industries.
Yeah.
The ones setting the pace rather than lagging behind.
Yeah.
I like that. It seems like a common sense principle.
Yeah.
But one that's easy to overlook when you get caught up in the hype
Yeah. I
of
would
a
say
specific sector or trend.
definitely.
You're right. CAN-SLIM encourages a disciplined approach, focusing on those companies that have a proven track record of success.
For sure.
Now, builds on what we were just discussing about institutional buying. It stands for institutional sponsorship.
Right.
Right. We talked about watching for high volume as a sign of institutional interest.
Yeah.
But this element dives a bit deeper, right?
Yeah, absolutely.
It's not just about any institutional buying, but about identifying those stocks favored by truly successful institutions.
Exactly. You want to see institutions with proven track records of picking winners, investing in the companies you're considering.
Right, right.
Their involvement adds a level of validation,
Okay.
suggesting that the company's worth a closer look.
It's like having a team of experienced scouts vouching for a player's potential.
Yeah, good analogy.
I can see why that would be valuable information.
Yeah.
Okay, so we've gone through C, A, N, S, L, and I.
Right. Which leaves us with M.
And M stands for market direction,
Okay.
which is arguably the most crucial element of all.
Really,
Yeah. Even with a fantastic stock pick, an unfavorable market direction can completely wipe out your gains.
That's a sobering thought.
Yeah.
It really highlights the importance of understanding the bigger picture, those overall market trends, before making any decisions.
For sure.
It's like checking the weather forecast before you set sail.
Exactly.
You don't want to get caught in a storm unprepared.
Right.
The book goes into detail about how to analyze market trends, focusing on the Dow Jones Industrial Average and the S&P 500 as key indicators, right?
Yeah, it teaches you to read the signs, to recognize whether we're in a bull market or a bear market.
Okay, so we've got our Can Slim checklist.
Yep.
That's a pretty solid foundation, I think, for identifying companies with growth potential.
It is, yeah.
But I have a feeling there's a lot more to uncover.
Oh, yeah, for sure.
In how to make money in stocks. Absolutely. Can Slim is a starting point.
Okay.
But the book goes much deeper, providing a comprehensive approach to investing.
Okay.
One of the most valuable tools it introduces is the power of chart reading.
Chart reading, okay.
Yeah.
I'll admit, charts can seem a little bit intimidating at first glance.
Sure.
All those lines, all those patterns.
Like a secret code.
It is. It's like trying to decipher a secret code.
Yeah, but How to Make Money in Stocks helps you crack that code.
Okay.
Explaining how to read charts like a pro. And trust me, once you understand the language of charts, you unlock a whole new level of insight into market behavior.
So charts are like a stock's diary, revealing its ups and downs, its struggles, its triumphs. What kind of secrets can we learn from them?
Well, charts can reveal a lot about a stock's past performance,
Okay.
its current momentum, and potentially its future direction.
Interesting.
They help you identify key patterns like breakouts.
Breakouts, interesting.
Yeah.
I've heard that term thrown around before. Can you explain what that means in the context of chart reading?
Yeah, a breakout occurs when a stock's price breaks through a previous resistance level on high volume, often signaling a potential surge upward.
So it's like a racehorse bursting out of the starting gate.
Yeah.
A sudden surge of energy that suggests the stock is ready to run.
Yeah, I like that. Good analogy.
Now, charts are fascinating, but I'm curious about this concept of the great paradox that you mentioned earlier.
Yeah, that's one of the things that really grabbed my attention in the book.
Yeah.
It challenges the conventional wisdom that the riskiest stocks are the ones to avoid. The book argues that the stocks that appear the riskiest,
Okay.
the ones that have already experienced significant price run-ups,
Right.
often have the highest potential for further gains.
That seems counterintuitive. Most people would think those stocks are due for a correction.
Yeah, that's the conventional wisdom.
Right.
But How to Make Money in Stocks presents a compelling case,
Okay.
backed by historical data, showing that the biggest winners are often those stocks that have already proven their ability to climb.
That reminds me of the example they gave of Syntex Corp.
Yeah.
The stock that defied expectations and continued to climb even after breaking out to new highs.
Exactly.
It really underscores the idea that sometimes the best opportunities are hidden in plain sight.
They are.
Now, this doesn't mean you should just blindly chase every high-flying stock,
Of course not.
but it does challenge us to rethink our assumptions about risk and reward.
For sure.
Okay, so we've got Can Slim for identifying promising companies.
Yeah.
We've got chart reading for understanding market behavior.
Right.
And we've got the great paradox to challenge our conventional wisdom.
Absolutely.
What else does How to Make Money in Stocks have in store for us?
Well, one of the things the book stresses is the importance of focusing on companies with entrepreneurial management.
Okay.
They argue that these companies are often the ones driving innovation and creating real value.
That makes sense. Think about all the tech giants that started as small startups.
Right.
They weren't afraid to disrupt the status quo and create entirely new markets.
Exactly. And the book makes a compelling case for why focusing on smaller, more dynamic companies, particularly those with entrepreneurial leadership, can lead to discovering the market leaders of tomorrow.
It's like investing in those seedlings that have the potential to grow into towering trees.
I like that.
But realistically, not every investment is going to be a winner.
Right.
I'm guessing the book also talks about how to manage risk,
Of course.
and how to avoid those common mistakes.
Absolutely. One of the biggest mistakes they highlight is holding on to losing stocks for too long,
Yeah.
hoping for a turnaround.
That's something I've definitely struggled with in the past.
It's human nature to be optimistic,
Yeah.
but sometimes it's better to cut your losses and move on.
It's hard to admit defeat,
It is.
but I can see how clinging to a sinking ship can really hurt your portfolio in the long run. What kind of guidance do they offer on this?
They recommend setting a predetermined loss limit, something like 7% or 8%,
Okay.
and selling a stock if it falls below that level, no matter how much you might believe in its potential.
That's a really practical tip. I like that.
Yeah.
It takes the emotion out of the equation
Exactly.
and helps you make more rational decisions.
Yeah.
It's like having a safety net to catch you if you fall.
Good analogy.
Okay, so we've got strategies for picking winners, identifying buying opportunities through chart reading, and managing risk by cutting losses. What else does How to Make Money in Stocks cover?
Well, remember that crucial M in CanSlim, market direction.
Right, right.
The book goes beyond simply telling you to understand the market. It actually provides practical guidance on how to analyze market trends and interpret the signals the market is sending.
That's great. It's one thing to say you need to understand the market. It's another thing entirely to actually know how to do it.
Exactly.
What kind of tools and techniques do they suggest?
They emphasize the importance of closely watching daily price and volume changes in the major market indexes,
Okay.
like the Dow Jones Industrial Average and the S&P 500.
Right.
These indexes act as barometers of overall market health.
So it's like taking the market's temperature each day
Yeah.
to see if it's running hot or cold.
Exactly.
And by paying attention to those signals, we can make smarter decisions about when to buy, when to sell, or when to just hold.
Absolutely. It's about being proactive and responding to the market's cues,
Okay.
rather than just reacting emotionally to price fluctuations.
Okay. We've covered a lot of ground already.
We have.
But I'm sensing we're just scratching the surface of
Yeah.
what How to Make Money in Stocks has to offer.
There's much more to explore,
Yeah.
for sure. Welcome back to our deep dive into how to make money in stocks.
Yeah, we've built a solid foundation.
Well, we have.
But now I'm ready to get into the real nitty-gritty, of finding those hidden gems in the market.
All right.
We've talked about the importance of looking beyond the familiar names
Right.
and considering those lesser-known companies,
Absolutely.
especially those that have recently gone public, right?
It's like scouting for talent in the minor leagues, right?
Yeah.
You're looking for those hidden gems with the potential to make it to the big leagues.
Mm.
How to Make Money in Stocks suggests keeping a running list of these new stock issues,
Okay.
particularly those that have emerged in the last 10 years.
That makes a lot of sense. These newer companies, they often fly under the radar,
They do.
especially if they had a rocky start
Right.
during a bear market.
Yeah.
But if they have solid fundamentals, innovative leadership,
Yeah.
they could be poised for a major comeback.
Absolutely.
When the market turns bullish,
For sure.
you're catching on quickly.
Well, the book also provides some really insightful guidance on reading charts.
Yes, chart reading.
Yep.
We touched on this earlier,
We did.
but I'm ready to dive a little bit deeper.
Okay.
I'll admit, charts can seem a bit intimidating, at first glance.
Okay. Here you are.
All those lines, all those patterns.
It's like a secret code waiting to be cracked.
It is. It's like a secret code.
Yeah. And How to Make Money in Stocks
Mhm.
does an excellent job of teaching you how to crack that code.
Hmm.
One of the key concepts is understanding bases.
Bases. Okay.
Yeah,
I've heard that term before.
sure.
But can you break it down for me? What exactly is a base in the context of chart reading?
Yeah, a base is essentially a period of consolidation in a stock's price chart.
Okay.
It's a time when the stock is taking a breather
Mm.
after a previous advance,
Okay.
like an athlete resting and training before their next competition.
So it's not necessarily a sign of weakness.
No.
It's more like a pause
Yeah,
before the next big move.
precisely.
And the book, it identifies several specific base patterns
It does.
that have historically preceded significant price advances.
Yeah, one of the most common and reliable patterns is the cup with handle.
Cup with handle. I like that.
Yeah,
It's very visual.
it is.
Does it literally look like a cup with a handle?
It does. The cup represents a period of decline, followed by a gradual recovery,
Okay.
forming that rounded shape of a cup.
Right.
And then the handle represents a final shakeout before the stock breaks out to new highs.
So it's like a roller coaster ride. with a thrilling climb followed by a dip and then that final surge to the top.
Yeah, that's a good way to put it.
I can see how recognizing this pattern could really help you anticipate a stock's next move.
It can.
Are there other base patterns that investors should be aware of?
There are. Another common one is the double bottom,
Okay.
which, as you might guess, looks like two consecutive dips in the stock's price chart, followed by a breakout above the previous resistance level.
So it's like the stock is testing the waters, right?
Yeah.
Bouncing off the bottom twice
Yeah,
before deciding it's time to move higher.
that's a great way to visualize it.
And both the cup with handle and the double bottom, those are powerful signals
They are.
that a stock might be gearing up for a significant advance. Yeah,
But of course, it's important to remember that charts are just one piece of the puzzle,
absolutely.
right? We need to consider these patterns in the context of the company's fundamentals,
Right. Yeah.
industry group,
Yep.
and the overall market environment.
It's like having multiple pieces of evidence to support your investment thesis.
Exactly. And speaking of evidence, the book emphasizes that volume is a crucial element
Yeah.
to consider
It is.
when analyzing chart patterns.
Right.
That makes sense. A breakout from a base on high volume
Yeah,
is a much stronger signal than a breakout on low volume.
exactly.
It indicates that there's real buying interest behind the move.
High volume suggests conviction,
Hmm.
while low volume can be a sign of hesitation or uncertainty.
Okay.
Think of it this way. A rocket needs a lot of fuel to reach orbit.
Right.
A stock needs a lot of volume to sustain a significant upward move.
That's a great analogy. Now, I know chart reading is a skill
It is.
that takes time and practice to develop.
But I'm starting to see how powerful it can be.
It's like learning a new language. The more you immerse yourself in it,
Right.
the more fluent you'll become.
Hmm.
And the rewards can be significant.
Okay.
The ability to read charts opens up a whole new level of understanding about market behavior, allowing you to anticipate trends and make more informed decisions.
Okay. I'm definitely going to be spending some quality time studying charts.
Good.
Now, is there anything else we should know about chart patterns before we move on?
There is one more pattern I want to touch on, and it might seem a bit counterintuitive at first. Ascending bases.
Ascending bases? Okay, I'm intrigued. Tell me more.
An ascending base forms when a stock experiences 3 consecutive pullbacks
Okay.
of 10% to 20%,
Mm.
with each low point being higher than the preceding one.
So it's like climbing a staircase.
Yeah,
Each step back is followed by a step up.
precisely. And these pullbacks often occur because the overall market is declining at the time.
Okay.
But the fact that the stock is making higher lows even as the market is falling is a sign of underlying strength.
So it's like a swimmer fighting against the current,
Yeah,
but still managing to make progress.
exactly. And when the market finally turns bullish, these stocks are often among the first to emerge at new highs
Yeah.
and make significant gains.
Hmm.
It's like a spring that's been compressed and is ready to release its energy.
That's a great way to visualize it.
Yeah.
I'm starting to see how these patterns can provide really valuable clues
They kind of.
about a stock's potential, but I imagine there's a lot more to chart reading
Oh, yeah.
than just recognizing these basic patterns, right?
There is. How to Make Money in Stocks goes into much greater detail,
Okay.
explaining how to identify support and resistance levels, interpret volume trends, and recognize those subtle shifts in momentum that can signal a change in direction.
It sounds like a fascinating but complex field of study,
It is.
but I'm definitely motivated to learn more.
It's an investment that will pay off in the long run. Now, let's shift gears for a moment and revisit a key theme of the book: recognizing and learning from past mistakes.
That's something we all need to do, whether we're investing in the stock market or just navigating life in general.
Right, for sure.
What specific guidance does How to Make Money in Stocks offer on this?
The book emphasizes that the stock market is a continuous learning process,
Okay.
and that even the most experienced investors make mistakes.
Right.
The key is to not let those mistakes define you, but rather to use them as opportunities for growth.
So it's not about beating ourselves up over past missteps.
No.
It's about analyzing those missteps
Yeah.
and figuring out what we can learn from them.
Exactly. The book even suggests a valuable exercise: carefully analyzing every one of your past failures in the market, examining the decisions that led to those losses, and determining what you could have done differently.
That's a powerful exercise. It's easy to just, brush those losses under the rug and move on.
It is.
Yeah. But taking the time to really dissect them could prevent us from making the same mistakes again.
Absolutely. It's about moving from a mindset of hope and speculation
Okay.
to one of knowledge and informed decision-making.
Okay, so we've covered the importance of studying charts, recognizing patterns, and learning from our mistakes. What else is on the agenda for today's deep dive?
Well, one of the things How to Make Money in Stocks emphasizes is the importance of paying attention to the news.
Okay.
But not just any news, the right kind of news.
That's interesting. I've heard people say that you should ignore the news altogether when
Yeah.
it comes to investing.
I've heard that too.
But I can see how certain types of news could be valuable.
Exactly. The book argues that investors need to be discerning about the news they consume,
Hmm.
focusing on news that directly impacts the companies and industries they're interested in,
Okay.
rather than getting caught up in the constant barrage of headlines and opinions.
So it's about being selective and focusing on information that's relevant to your investment thesis.
Precisely. And they also caution against blindly accepting the conventional wisdom or consensus opinion often presented in the media.
Oh,
It's
yeah.
about being a critical thinker,
Right.
evaluating information independently, and forming your own conclusions.
That's a valuable reminder.
Yeah.
It's easy to get swept up in the hype or fear that the media often generates.
It is.
But it's important to maintain a level head
For sure.
and make decisions based on your own analysis.
How to Make Money in Stocks encourages investors to think for themselves, to
Right.
challenge assumptions, and to be skeptical of easy answers or quick fixes.
That's a great approach to investing and to life in general, I think.
It is.
Now, before we wrap up this part of our deep dive, I want to circle back to something we touched on earlier,
Okay.
the importance of understanding market direction.
Yeah.
We know it's crucial to know whether the market is in a bull phase or a bear phase
Right.
before making any involvement decisions.
Absolutely. And How to Make Money in Stocks provides specific tools and techniques for determining market direction,
Okay.
emphasizing the importance of interpreting price and volume changes in the major market indexes.
Right. They stress the importance of watching for those telltale signs.
They do.
That the market is shifting from a downtrend to an uptrend or vice versa.
Right, but it's not always easy to read those signs, especially in a volatile market.
You're right. It takes practice and a keen eye for detail.
It does.
But the book provides clear guidance,
Yeah.
explaining how to identify key support and resistance levels, interpret volume patterns, and recognize those subtle shifts in momentum that can signal a change in direction.
It's like being a detective, looking for clues that reveal the market's true intentions.
It is, and this ties back to their emphasis on being a disciplined and data-driven investor,
Yeah.
rather than relying on gut feelings or emotional reactions.
It's exactly. How to Make Money in Stocks provides a roadmap for achieving that discipline, allowing investors to make smarter, more informed choices, regardless of the market's mood swings.
Okay, we've covered a lot of ground in this part of our deep dive.
Wow.
We've explored the intricacies of chart reading, learned about the importance of critical thinking when consuming news, and delved deeper into the art of interpreting market direction.
And in the next and final part of our deep dive,
Okay.
we'll bring it all together. We'll discuss specific strategies for managing your portfolio, determining when to sell, and applying these principles in today's market environment.
Sounds like a plan. I'm looking forward to putting all the pieces together and seeing how these strategies can be used to build a winning investment portfolio. Welcome back. We've spent the last two parts of this deep dive really getting into the nuts and bolts of how to make money in stocks.
Yeah, we've covered a lot.
From can slim to chart patterns, we've covered a lot.
Absolutely.
But I'm eager to talk about the selling side of things. You know, knowing when to take profits is just as crucial as knowing when to buy, wouldn't you say?
Absolutely. That's like that old saying.
Yeah,
You don't make money until you sell.
right.
And How to Make Money in Stocks doesn't shy away from this crucial aspect of investing.
So what kind of guidance does the book offer? Is there like a specific formula or a system for knowing when to sell?
Well, there's no magic formula,
Right.
but the book emphasizes that the best time to sell a stock is often when it's still advancing,
Okay.
before it shows signs of topping out.
Hmm.
It's like getting off the train before it reaches the end of the line.
That's a great analogy.
Yeah.
You don't want to be caught holding the bag when everyone else is rushing for the exits.
Right, exactly.
But how do you know when a stock is about to reach its peak? Are there any telltale signs?
There are. One of the key indicators the book highlights is the stock's relative price strength rating,
Okay.
or RS rating for short.
Okay, RS rating. Can you refresh my memory on what that is exactly?
Yeah, the RS rating measures a stock's price performance relative to all other stocks in the market over the past year.
Okay.
So a stock with a high RS rating is outperforming most other stocks.
Right.
suggesting strong momentum.
That's like a ranking system,
Yeah.
showing you which stocks are the strongest performers in the market.
Exactly. And the book suggests that investors consider selling a stock when its RS rating starts to decline,
Okay.
even if the stock is still making new highs.
That seems counterintuitive.
It does,
Why would you sell a stock that's still going up?
because the declining RS rating could be an early warning sign that the stock's momentum is waning.
Okay.
It's like noticing that a runner is starting to slow down, even if they're still in the lead.
Hmm.
It could be a signal that they're losing steam and about to be overtaken.
That's a great analogy. It's about recognizing that even the strongest stocks eventually run out of steam.
They do.
So we're watching the RS rating for signs of a potential slowdown. Are there any other indicators we should be paying attention to?
The book also emphasizes the importance of setting a predetermined profit target.
Okay.
They suggest aiming for gains of 20% to 25%,
Hmm.
or even more if the stock is showing exceptional strength and all other indicators are positive.
Okay, so we have a target in mind.
Right.
But what if the stock keeps going up? Do we just keep holding on?
That's where trailing stop-loss orders come in.
Okay.
The book explains how these orders can help you lock in profits while still allowing the stock to run as long as the uptrend continues.
Trailing stop-loss orders. Interesting. Can you explain how those work?
Yeah, a trailing stop-loss order automatically sells your stock if it falls a certain percentage below its recent high.
Okay.
You set the percentage based on your risk tolerance and the volatility of the stock.
So it's like setting a safety net that
Yeah.
moves upward as the stock climbs.
Exactly.
If the stock keeps rising, the stop-loss order rises with it.
Right.
But if the stock starts to fall, the stop-loss order triggers a sale,
Yep.
protecting your gains.
It's a way to automate your selling decisions and take the emotion out of the equation.
That's a great point. It's so easy to get caught up in the excitement of a rising stock and just hold on for too long, hoping for even bigger gains.
Yeah.
But having a predetermined exit strategy,
Right.
whether it's based on a profit target or a trailing stop-loss order,
Yeah.
that can help you stay disciplined
You can.
and avoid those costly emotional decisions.
Absolutely. Now, we've talked a lot about letting winners run,
Right,
but the book also reminds us that not every investment is going to be a winner.
right.
Sometimes we're just wrong.
Yeah,
And in those cases, it's crucial to cut your losses quickly.
right. We talked about this earlier. It's so tempting to hold on to a losing stock, hoping it will eventually bounce back.
It is, yeah.
But often that just leads to bigger losses.
Often it does.
The book reiterates the importance of setting a predetermined loss limit,
Right.
something like 7% or 8%,
Yeah.
and sticking to it no matter how much you might believe in the stock's long-term potential.
Exactly, no matter what.
Okay, so we have a plan for both taking profits and cutting losses.
Yep.
That's a key part of any sound investment strategy.
It is.
But we focused mainly on individual stocks so far.
Yeah.
What about mutual funds? Does how to make money in stocks offer any guidance on those?
It does. The book acknowledges that mutual funds can be a great way to diversify your portfolio and reduce risk, especially for investors who don't have the time or expertise to research individual stocks.
That makes sense. Mutual funds give you that instant diversification,
They do.
spreading your risk across a basket of stocks.
Yeah.
But with so many mutual funds out there, how do you choose the right ones?
The book provides specific criteria for identifying top-performing funds,
Okay.
focusing on those with consistent track records, experienced managers, and a clear investment strategy aligned with your goals.
Okay, so we're looking for funds that have a proven ability to generate returns
Yeah.
and are managed by people who know what they're doing.
It's like hiring a team of expert investors to manage your money for you.
That's a great way to think about it.
Yeah,
But even with mutual funds,
Right.
it's probably wise to diversify, right?
absolutely.
Not just across different stocks within a fund, but across different asset classes as well.
You're absolutely right. How to Make Money in Stocks emphasizes the importance of spreading your risk across different asset classes,
Okay.
such as stocks, bonds, and real estate.
So it's not just about picking the right stocks or funds,
Right.
but about building a balanced portfolio
Right.
that can weather different market conditions.
Precisely. And that brings us to one of the most valuable takeaways from How to Make Money in Stocks.
Okay.
Its emphasis on the importance of independent thinking and critical analysis.
I love that about this book.
Yeah.
It's not a get-rich-quick scheme
Yeah.
or a set of rigid rules to follow blindly.
Right.
It's more about developing a mindset, a way of thinking about investing that empowers you to make your own decisions.
Exactly. The book encourages you to do your own research, to question assumptions, to challenge conventional wisdom, and to form your own conclusions.
Right.
It's about being an active and engaged participant in the market, not a passive bystander.
And that takes effort, it takes discipline,
It does,
and a commitment to lifelong learning,
for sure.
but I think the rewards are worth it.
Absolutely. Now, as we wrap up our deep dive, I want to leave you with one of the most thought-provoking questions the book poses.
Okay.
If historical trends are any indication, what emerging industries or companies today might hold the potential for significant growth in the future?
Wow, that's a great question.
Yeah,
It's not just about understanding the market today.
right.
It's about anticipating what the market of tomorrow might look like.
Exactly. The world is changing rapidly,
Hmm.
and those who can identify the next wave of innovation and disruption will be well positioned to profit.
So it's about looking beyond the present
Yeah.
and envisioning the future, what technologies, what trends, what societal shifts are likely to shape the world in the years to come, and which companies are leading the charge.
Those are the questions that will separate the successful investors of tomorrow from those who are stuck in the past.
I love that it's a call to action, a challenge to be curious, to be forward-thinking, and
Yeah.
to never stop learning.
Absolutely.
This has been an incredible deep dive.
It has.
I feel like I've gained so much valuable knowledge and insight from how to make money in stocks,
Good.
and I'm excited to put these principles into practice.
I'm glad to hear that. Remember, the tools and insights we've discussed are just the beginning.
Great.
The real learning happens when you apply these principles in the real world, making your own decisions, learning from your mistakes, and building your own path to financial success.
So go forth and invest wisely. This has been The Deep Dive. We'll see you next time.